Good evening, this is John Locke, and welcome to the Locke in Your Success Trade and Market Update for June 2nd, 2013. Before we get going, we'd like to remind you that this presentation is for educational purposes only. Neither Locke in Your Success nor myself are broker-dealers or financial advisors. Therefore, we are not making specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event something is a computer simulated trade, we do the best we can to represent that trade as accurately as possible. However, live results may differ. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Also, if you're watching this on YouTube, please come on over and visit our trading blog and join our mailing list at www.lockeinyoursuccess.com and take a look at our Rock M3 and Bear Butterfly video series, as well as our group and one-on-one mentoring services. All right, let's take a look at the markets. On the S&P and Dow on Friday, right in the afternoon, we had a really hard sell-off. As far as I'm concerned, that sell-off really doesn't mean anything. We did break some very short-term support levels on both the Dow and the SPX, as you can see here. If we're looking at our short-term charts, if we come over here and go to a 60-day, 1-hour chart, and you take a look at our price pattern does put some price targets down here at the 1600 level, which would be a target if we get any sort of a breakdown from here. I don't know that we're going to get that because when we go back and we look at the Russell and we look at the NDX, we didn't get any sort of real support breaks there. But I would say worst case scenario to the downside, I'd be expecting here for now would be the 1600 area. More than likely, we're going to continue our path inside this channel here. So let's come back to the daily chart. What I'm expecting is probably a touch down to the lower end of this channel and at the very worst the 1600 level. If we break down from there, then we'll have to see, but more than likely we stay in the channel. If we take a look at our Dow, we have our channel here as well. We just came down to the lower end of this. If the SPX does test the lower side of its channel, it'll probably push this down to its next support level down here, which is going to coincide with the 1485 level and where the 50-day moving average is. And to the upside, I would say we're likely to not break any new highs this week. So for the week here, possibly a little bit lower. All the longer term charts are still very, very bullish. So even a break of this trend channel, I don't think is anything major. Worst case scenario, which would be a very severe pullback, we pull back to this trend line here. But even that, we're still longer term bullish. So longer term bullish, short term sideways is what we're expecting for the Dow, is what we're expecting for the SPX. If we look at the NASDAQ, we just barely broke our 20-day moving average, didn't break even any shorter term support levels here. I'd expect the NDX to stay in a range of around 29,660 to at the very top here, 3,050. So basically more wide sideways chop. And if we run to the Russell, we're looking at the same thing. We said last week with the Russell we were expecting this to hold a range from 970 to 1010. We did. We had a bit of a bounce here, and we're just kind of settling into this pennant. We did break a little bit. I mean, depending on how you want to call it, you could say we broke a steep diagonal trend line here. If I do short-term price patterns here, you can see we broke this pennant. You see we broke it a little more clearly, and you can clearly set a price target here for the 970 level. If you wanted to go ahead and do that, you could even make an argument for the 950 price level. Like I said, I don't really think this means anything. Most likely downside target, or at least the earliest downside target's 970. And I would expect 1010 to hold, and we more or less just kind of stay in this box range for a while. So that's what I have for the markets. As far as our trades, if we take a look at, we'll take a look at the June M3 first, because this one got the most action. And everything else really didn't get anything except for something really minor on the June V Condor. So if we come in here and look at what we looked like on Monday morning, or I should say Tuesday morning, because Monday was a holiday, we had this position on here, 10 long 920s, 6 short 950s, 4 short 960s, 10 short 970s, 10 long 1000s. I allowed myself to get chopped up a little bit this week, so I wasn't too happy with that. Every time I made the move, we went the wrong way. So on Monday, I took 6 of these 950s to 960, And of course, Tuesday the price came down, so I took 5 of these 1000s to 1010 on Tuesday. Then on Wednesday the price was back up again, so I took 5 of these 970s to 980 to end up in this position here where I have 10 920s, I'm short 10 960s, short 5 970s, 5 980s, long 5 1000s, long 5 1010s. Still very positioned very well here. Just cost myself from getting chopped back and forth because the movements were made at the wrong time. None of them were completely necessary, but I'm just trying to widen out my tent with a market move and be very aware that the market's been extremely bullish and we're very overbought in general and could break out fairly harshly in either direction. So I'm just kind of trying to cover myself both ways. In doing so, I'm costing myself probably $1,000 this week. So not a big deal, and this is what our currently analyzed graph looks like. If you'd like to take, we're very well positioned here. If you want to look at the T-log, this is what happened during the week. This is Tuesday's move, Wednesday's move, Thursday's move, as I was saying. And here's our current position. The only other trade that got any kind of adjustments was the June V Condor. If you remember, last week when the market was running down, I sold off 3 of these 1030s to try and get some more credit in here. Of course, Tuesday we had a fairly aggressive up move, and I had to buy them back because our delta started to get too high. And of course, it was unnecessary, but we didn't know that at the time. So, I'm happy with the way things are going here. We're at like a $2,500 down now. We may be able to expire this. I might be able to bring more credit into it, but then again, I may not bother. We'll see what happens here. But most likely, we're going to expire this thing at what's the expiration line at for a profit. It's like about $1,500, $1,800 profit. I would say that's most likely what's going to happen. If we need to make adjustments, however, we will. And that's all the adjustments we made with any of the trades. So let's just take a look at the other trades that happen to be open. We have our V Condor for July, which didn't get any adjustments, as I was saying. If we take a look at this, this is where we're sitting. If we don't break out in any direction, I'm going to start widening this V out and bringing up our expiration line here. But for right now, there's really no need to do anything. And we'll probably be sitting here for another week if the market does what we think it's going to do, making this just a nice, easy trade. If we come up to the June rock trade, this position here also did not get any adjustments. This is what we look like as of 3:30 on Friday. As you know, the market came down further, so it's up a little bit more money. This is doing perfectly fine, and there's no issues with it. If we get any really hard down move, we would pull this back into an M3R position. And of course, if we sit here or get much of an up move, we're going to start scaling into the 1010s here. If the price remains in a sideways range, we'll probably be starting to add some there. We have the option also of rolling these 1030s back to 1010, but I'll more than likely just add in at the 1010 level. So this is where we sit here. We also have the July bearish butterfly that's open, which is sitting at $1,800, almost $1,900 profit as of 3:30. Again, with the pull down in the last half hour, that went up significantly. And this is what the position looked like at that particular time. There were no adjustments. And obviously, this is doing fairly well. The last thing I told you we would look at is the June bearish butterfly if we were to leave it open. And I'm still confident that this will probably actually draw profitable. But if we want to look at this now, we're down to only a $6,000 loss, which is a recovery from an intraday down of 17,000. And we were certainly, you could say, at close, we were down at one point like 13. So it's doing fairly well. It's 21 days to expiration, so we're in the expiration guidelines. And like I said, we'll just try to track this in on paper, see how we would have done had we stayed in. But as of now, this looks perfectly fine. So that's all I have for the week. I'll keep you updated with any changes. Thank you, and have a great week, everybody. Good night.